Am I good? Am I live? I'm live? I'm live. All right. Ladies and gentlemen, we're going to talk about the stock market Super Bowl indicator. Is there any consistency in predicting the outcome of the S&P 500 over the year based on who wins tonight's game? My answer might actually surprise you. We're going to review chart parameters and why they're useful and why the ones that I'm not using are also very useful, as well as the Newsbeat live open house, our precise daily stock levels, our game plan and Forex, as well as our full stock analysis. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. Thank you so much for joining us here during the Super Bowl. I'm going to make this very quick and explain something. So there's been a superstition that says the stock market's performance, referring to the S&P 500, can be predicted in a year based on the outcome of the Super Bowl. But before we get started, and so much more, you must agree to hold Mark Melnick not liable for anything that you might hear, think, say, shown on this video. You do not agree to hold me legally harmless. You must exit this video immediately. Thank you so much for that. And this was discovered by Leonard Coppett back in the 70s when he realized that it had never been wrong up until that point. This pseudo macroeconomic concept states that if a team from the American Football Conference, which is the Patriots, wins, then it will be a bear market or a down market in the S&P 500. But if a team from the National Football Conference wins, the Rams, or a team that was in the NFL before the NFL AFL merger wins, it will be a bull market. So if you remember NFC, the Eagles won. The S&P 500, that indicator was actually wrong, but believe it or not, if you actually followed that advice, you would be right 80% of the time in predicting whether the market was bullish or bearish. And granted, that's not to say that anything does or doesn't happen, but basically what it's saying is that if the Patriots win tonight, we'll be in a bear market, and if the Rams win tonight, we'll be in a bull market, and that indicator is correct 80% of the time for whatever that is worth. Just thought I would point that out. You ever notice when you look at somebody else's charts, there's so many things on it. Like even my 5-minute chart, look, you see all these colorful lines and these dotted lines and these trend lines, and it looks, so confusing to some, and it's just like there's all these indicators overlapped on it, and it's kind of an interesting thing to look at that because I'm being asked what attributes, overlays, and indicators do I feel are best on stock charts. The truth is, the things that are best to have on your stock charts are things that help you become consistently profitable. If you're utilizing something that you're unable to use profitably, you have to come up with the decision, either get rid of the technical indicator or figure out what you're doing wrong. Because the bottom line is anybody who bashes any technical indicator out there, unfortunately, is coming from a place of ignorance. Not saying they're unintelligent or stupid, just ignorance in terms of the true definition of ignorance. They just don't they're just not privy to certain information, and they don't realize it's even there. The fact is, working with so many algorithms in the past, that every form of technical analysis work. I've seen algos running things that you've never heard of before. Things like balance of power and a Chaikin money flow indicator and the Arun oscillator and accelerator bands and time segmented volume and time series forecast and a tricks indicator. And I've seen all these things consistently help people make money. So here's the bottom line. If there's something on your chart which you're unable to make money on, all it means is that you have not figured it out yet. And don't use that as, a potential diss or something. You shouldn't use that, potentially negatively. That is not a negative thing. That, believe it or not, is an extremely powerful thing because it just shows you how much more there is to learn in the market. So when you're looking at my charts right now, here's a 5-minute chart of the exponential 8, the exponential 21, a simple 50, a simple 200, and simple pivot points here, as well as, of course, as volume. And, I drew some trend lines. Now, I know how to make money utilizing every single thing on this chart. And what you'll notice over the years from my encounters with other traders and whatnot, you'll notice that I'm actually adding and removing things from my charts over the years, and that is part of evolving and changing with the market. I know people are like, oh, the market is always changing and evolving, and it's easy to make blanket statements, but really very few people, almost nobody from what I know, I would say one trader out of 100,000, if that many, will actually put in the time and say, okay, the market is changing. It is time to evolve. What is working today? And I did a Newsbeat show, the evolutionary gathering earlier, when I was showing you that if you took Apple, Facebook, Amazon, and Microsoft, like four of the largest companies in the world, and you simply bought through any 5-minute test of the exponential 21 if it gapped up, or shorted through any test of the exponential 21 on a 5-minute chart when the stock gapped down, you would have made money. And people are like, what the heck? What the Mark? What are you talking about? I'm just going to show you really, really, really quickly. I promise this will not take long at all. And basically, so for example, like Apple gapped up on earnings, right? I mean, we were part of it. I get it. And then I said Apple earnings weren't that great, but Tim Cook is a genius, and that's why they gapped up. My exponential, here's a 5-minute chart of Apple. Ignore everything except for this blue line, this light blue line you see here. What you'll notice is when you come down and you hit this blue line, you went straight up. So if you actually bought when it hit that blue line, you would have made money. Hindsight, 2020, right? Sure. Facebook also gapped up. Now, Facebook hit this blue line for the first time right over, let's see, actually, I want to pick it. Yeah, right over here, they reported when you could have traded it on Thursday, and you could see it tested right over here, slammed through 81 cents, went through the blue line 28 cents, went to 168.53, and on the next 5-minute bar went to 169.32. Easy scalp for quick money if that's what you are looking for. Then I also gave you Amazon as an example, which earnings I thought were personally abysmal. And I already went through my analysis of Amazon. So this one gapped down, as you know. So here's the 5-minute start. You could see it went up. But you see right over here when it hits the blue line for the first time, that exponential 21 moving average, because it gapped down, I would say you would short there. And if you did short right there, you would have noticed that you could have made good money because it basically hit the blue line at 1654.44, went as high 1655.82, and went $1.38 against that line. For Amazon, a $1,600 stock is not even a blink, and then plummeted literally on the next bar 7 points. I'm not even saying you held it and caught this, this 30-point decline that ensued in Amazon after you could have easily shorted on that line, but you were up 7 points right away, and 7 points in Amazon is not a bad trade. Believe me, it's not. And if you're very light and you held it, never went against you. So that's 3 for 3. The one that didn't work, which I'll show you the example of, is actually Microsoft. Because Microsoft, did I say Microsoft? Yeah, Microsoft. You could see the blue line was right over here. If you shorted here, the stock would have gone right against you and then would have failed. So pretty much what I'm saying is if you follow this mentality on Apple, Facebook, Amazon, and Microsoft, you would be 3 for 4, which to me is great. Anything 70% plus is great. You would be 75%. So what I was saying earlier is watch for these statistical anomalies happening on whatever technical analysis you find. Have you sat there and looked at all the earnings names on all your technical parameters over this weekend, like I was? Maybe you weren't, but that's okay because I'm here to share with you what I find that is working right now and how I'm actually making money. So the thing always comes down to is there is no such thing as a better form of, a better technical parameter than somebody else. Like people will come to me and they'll say, Mark, I noticed you don't use Bollinger Bands and you don't use the Ichimoku cloud and you don't use Fibonacci. And I tell them, you're right. And they ask me, are they good? And I say, if you figure out how to use them well, of course they are. And if you don't, they're not. I've seen so many traders with like 100 different parameters on their chart, and I turn and I look at them and I'm like, do you know how to make money using all those parameters when working together? Do you know how to make money on that? And they're like, no. And I'm like, why do you have it up? If you're finding that you're inconsistent in this market, the first thing you should do is remove every single technical parameter on your chart. I'm surprised I didn't have this conversation years ago. I think I did back in 2015, actually, was the last time I spoke about this, but long overdue to speak about it again. If you're using forms of technical analysis that actually don't work in this market, have you ever tried of just removing everything off your chart and then starting with one thing at a time and then slowly add it as you figure it out and you become consistent on it? Think about that for a second. Some people have too many tools in which they don't even know what to do with. But with that being said, if you like these ideas, again, we do have our Newsbeat Live open house. You have one free week, and it's not really free to be part of the Newsbeat Live broadcast. You are spending your time with us, and I consider time your most valuable equity. So it's actually expensive, but it won't cost you directly monetarily. So if you do want to check us out and see what we do, I'm looking forward to serving all of you tomorrow, February 4th to February 8th. All throughout my birthday, you have Google reporting. You have so many names reporting that it's going to be quite an earnings week. So I am looking forward to serving you there. So I hope that gave you a little bit of an insight to what form of technical analysis works. And by the way, I might be good at predicting winners on the charts. When it comes to being a loyal football fan, cannot pick a winner if my life depended on it. I cannot pick a winner if my life depended on it. I am a Jets fan, and that comes with heartache, pain, and riding through the tough times. So with that being said, I am looking forward to serving you. Let's just get right into tomorrow's levels. Today, I do have a time machine. I did come from the future to share with you these algorithmic levels from tomorrow, today. These are the levels for February 4th, which is obviously tomorrow. These levels do not always hit. In fact, they usually don't. But when they do, you tend to have a very good risk reward going long near the support and going short near the resistance. In terms of the name that I'm watching for tomorrow, in terms of my game plan name, very simple. I'm watching Amazon short through today's low. Excuse me. I did come from the future. It was today, right? Friday's low of 1622.01. I saw that we were gapped up on Amazon, showing gapped up, silly after hours. It looks like, I don't know if this is right or not, showing 1637.57. I obviously do not believe that, and I am looking for a breakdown of 1622.01. That should be very interesting. Right now, the futures are gapped up a little. Things could change up and down throughout the day, so we will see more of that. With that being said, Forex trades. I did throw one new Forex trade on. It's the bottom one there. If you want to see it, I'll zoom in just a bit. And this is a trade that I had open for a while above the gray line, below it. It's a short order on US dollar Japanese yen, right at that price with a stop loss there and a take profit there. So very simple parameters there if you wish to copy them down. Again, with that being said, I hope you guys enjoy the Super Bowl. I am looking forward to trading this week, and I look forward to serving all of our new open house attendees, as well of course, as the Newsbeat Live Open House members. I do want to mention that if you are going to be part of the open house, there is a tutorial video that I left in the description of this video. It's also on YouTube. Just look up Newsbeat Live Open House Quick Tutorial, and I literally give you like it just looks like this, and it's just literally a quick tutorial. It's a quick tutorial of everything, and I literally break it down and um, go through everything. So just look up Newsbeat Live Open House Quick Tutorial, and you'll basically know what you need to be prepared for tomorrow. With that being said, ladies and gentlemen, I hope you guys enjoy the Newsbeat show. Happy trading, make money. I'll see a lot of you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful evening.